Apes and apettes, the best time to plant a tree was 20 years ago. The second best time is today. That quote has really stuck out to me throughout all of my years of investing, and it goes to show that great things take time and dedication and constant watering and updating your knowledge base. That's the tree analogy to you guys in your investment journeys and your investment lifetimes, and AMC is only just the start. Now, here in this video, I do want to go over a lot with you guys, give you guys a price prediction. I do want to go over the order flow and the order sentiment as well. We've just seen a very large institutional order of over $1 million, and I want to show you guys that trade because it is a call, and I think it will give you guys a lot of excitement. We are going to go over the earnings that are happening this upcoming week because we have the rest of the high flyers, the companies that are over $1 trillion or close to $1 trillion like Facebook, that are reporting next week, and they are also going to dictate the market sentiment. So there's a lot we're going to get into. Let's not waste any time. Let's continue watering this glorious tree that you guys are creating for yourselves. Hit that like button for me, subscribe to the channel, comment down below. And if you guys want access to all of my trades in real time, if you need somewhat of a mentor, if you want to learn options, you don't know where to start, you don't want to lose too much money, you just don't know, check that link out down there. We keep it very inexpensive, so anybody is financially able to join if they so want to, and that is where we can get into deep conversations. And if you have any questions, you can always ask your questions over there. So let's dive into this video. So first things first, let's talk about when companies are reporting, because that is when you're going to see a lot of volatility and you're going to see big moves in the marketplace. Literally every single day, you're going to see a lot of volatility. AMC could open up 10 to 15% positive tomorrow, or it could open up down 5%. Anything is really on the table because we don't have really any major earnings for Monday. The earnings really start to kick off on Tuesday, where you have Google reporting in after hours, AMD in after hours, Starbucks in after hours, GM in after hours, and PayPal in after hours. And I put GM on here because you also have Ford that reports on Thursday, and that's going to set the trajectory for a lot of EV stocks. And I know a lot of you guys are probably still invested in some EV stocks as well. So you do have two big companies right there. Well, three if you include PayPal. Starbucks, a medium-sized company, and GM, also a medium-sized company. Wednesday, you have Facebook, another high flyer. Facebook earnings are in after hours. Abivai, you guys probably don't know this company. It is a pharmaceutical company, a very large company, a $250 billion company I personally invest in. They are in pre-market. That is going to set the mood for a lot of pharmaceutical stocks. So if you guys are in Pfizer or you're in Moderna or Novavax, that's going to set the mood for the pharmaceutical stocks. Thursday, you do have Amazon in after hours, Ford in after hours, and then Snapchat in after hours as well. So these are really the big earnings the market is going to be watching. There is other earnings here and there, but these are the highest flyers. So do expect a lot of volatility, especially Tuesday, Wednesday, and Thursday. Volatility means opportunity, and Forbes is calling this the biggest tech earnings season in 10 years. As tech stocks crater and recover, fundamentals matter. So if companies do not report great numbers, they're going to take a beating, and you're going to see the markets react to the downside. Now, something else I do want to point out, if earnings are good, we do have a little bit of time until the next CPI reading, which the markets, that's all they're going to care about, because if inflation comes in worse, then they're going to start pricing in more rate hikes. They're going to start pricing in a more hawkish Fed, and the markets are going to sell off on that. The next CPI reading is not until February 10th though, so we have a little bit of time between now and then to either see a bounce or to see the markets sell off quite dramatically. And I do want to point this out for you guys. Andrew Left says things have changed for short sellers. He was the head of Citron, and we know Citron stopped their short reports and now they're focusing on long companies. But I want to point this quote out to you guys. In quotes, things have changed for short sellers. You don't want to be in a crowded short, left the Wall Street Journal on the 1-year anniversary of the meme stocks rally. So he's saying that these meme stocks are in a crowded short or crowded sport, whatever you want to call it. There's a lot of short sellers a part of these stocks. So that makes the downtrends even harder, but it's going to make the uptrends even harder as well. And I think there's going to be a lot of opportunities there with options as well as just buying and holding the stocks. But you have to be careful. Not all stocks are created equal. And that's why I like AMC so much, specifically at these levels, because it's pretty much at its fundamental valuation, if not a little bit under its fundamental valuation. And I think that's why you're seeing incredible order flow numbers that are starting to come out for AMC and some very large institutional investors that are buying the stock. And we will get into that in just 1 second. I do want to circle back to the CPI numbers. So for February 10th, that is when that comes out at 8:30 a.m. So be very mindful of this, that you are going to see a big gap up or gap down in the mornings. It's widely expected that inflation is going to continue to go up until about halfway through 2022, if not the end of 2022, because remember just a couple days ago when Fed Jerome Powell was giving his speech, his press conference, they asked him if he were to say, is inflation better or worse now than at their December meeting? Fed Jerome Powell said he expects inflation is worse now than it was in December. So I think the markets are going to price in a hawkish February 10th. We could sell off into that. If it comes in good, we could actually rally based off of that. And considering the margin debt that is outstanding at $910 billion, only going down $25 billion from its peak, people are still severely over leveraged on margin. And this is going to take some time to work itself out. And it's going to make those moves even more explosive. Now, besides the CPI, the next big catalyst is March 16th. You do have the FOMC meeting where Fed Jerome Powell will give another press conference. Pretty much a 100% expected to raise interest rates, either 0.25% or 0.5%. If he comes out with 0.5%, markets will sell off and they will not like that. But that is more forward looking, and I don't want to get so caught up in that right now. But that's the weird state that we are in, and that's why CPI is going to be so important from now until then. The reading that we get February 10th and then March 10th are going to dictate how hawkish or how dovish the Fed is likely to be. If inflation is super high February 10th, higher in March, then you're likely to see a 0.5% rate hike increase, and you're likely to see stocks sell off from now until that FOMC meeting, March 16th. So keep that in mind. Now let's flip and let's take a look at the option flow and the option sentiment. So on Friday, we've seen 17 positive orders totaling $5.26 million, positive order flow of only 20%. So a lot of bearish activity on Friday for AMC as far as institutional investors. And I should point that out. This is really your block trades, your sweeps, your very large trades. These are not retail orders that are buying a call here or a put here. That's not what this is. These are large, very large orders. And that's probably why AMC was kind of suppressed overall on Friday, not going up all too much, only 3.72% towards the end of the day. It was being artificially held down by all the negative orders that were going on. As far as the last 365 days, though, we still have a positive call to put ratio with an open interest of 0.51% on the call side. So slightly positive still. But then again, I do want to point out for you guys, over the past week, we have 160 orders totaling 102.07 million with a positive order value of 59%. So over the last week, we still have a slightly more positive inflow to the option chain overall. Now, a lot of these orders are going to be puts, a lot of them are calls as well. It seems like the put orders are a little bit smaller than some of the call orders, but I do want to point out some of the very large call orders for you guys. So here is a February 4th, so a next week trade, a $15 call, 4,000 contracts at $74 a piece. That represents $296,000 bet on AMC, going to $15.74 per share. And if we take a look at AMC's current price, it's sitting at $15, 1 penny per share. So somebody is betting a lot that AMC goes up quite dramatically next week. Okay, so now we do have, and this is the trade that I really want to show you guys because I was excited to see this. We have a January 19th, 2024 $3 call, so deep in the money. For they did buy 830 of these at $1,300 a piece. That was a $1.08 million sweep, and that's important because a sweep is somebody that wants to get into their position very fast. That means, like, when you're looking at an option, you have the bid and you have the ask. If you are somebody that is trying to get into a trade right away, especially with a very large amount, you would hit them straight on the ask. So you would hit them for $1,300 on the ask and get filled immediately, and that's what they did with over a $1 million trade. That is incredibly bullish. Their break even is $16 per share by 2024. So they're betting the stock goes even higher, and I do imagine with an order like this, they're betting the stock goes a lot higher than their break even of $16. Now let's move on from that. Let's talk about the short interest, the Untitled Chapter data, the max pain, and then give you guys a price target as quickly as possible. I don't want to waste any more of your time. The short interest is sitting at 20.85%, 107.02 million shares that are sold short. The cost to borrow estimates are going up with the cost to borrow max now at 2.32%. That is looking like it is going in the right direction. Share utilization is 75.51%. Days to cover at 2.51. So all of this looking incredibly bullish. Short interest at all-time highs since the June rally. So looking good right there. The max pain is sitting at $16 per share by the end of the week. And as far as the Untitled Chapter data is concerned, we only have about 63,000 calls that are out of the money, 5,700 that are in the money, 8,900 puts that are in the money, and 40,000 puts that are out of the money. Things could develop fast, and we could see the option chain blow up in a relatively short amount of time, but I don't expect a lot of extra volatility from the market maker side of this equation heading into next week. There's just not a lot of options that are currently on the chain. Now let's take a look at the chart, and I'm not going to kid with you guys. It doesn't look good. You're not seeing any technical breakout factors. We are hovering around $15 per share, which that was literally my price target. Price prediction on Sunday was $15 flat per share. We close at $15, 1 cent per share. So it's pretty clear what is going on. We're really fighting around $15, and it looks like you're seeing a lot of support around 15. So with that being said, my price prediction for this week is about $17 per share. On the high end, about $18.50 per share. If earnings are good, then I would expect about $20 per share. But what I would put my money on is about $17 per share. I think earnings, Apple earnings, Microsoft earnings have been good. I think Facebook, Amazon, Google, those earnings will be decent as well. Not really give us the dagger in the coffin to send the markets down. We could have a black swan event where one company is just very bad and they sell off 20% or so, like we've seen with Netflix, and that could bring the markets down. I'm not really holding my hat on that, and I do expect to see a somewhat bullish week for AMC just because the amount of shorts that are in their short positions that will probably want to cover some of those positions, and ultimately just being in a weird time frame before the CPI data comes out February 10th, and before the FOMC meeting March 16th, as well as the next CPI reading after February's, which is March 10th. So we're in a weird time frame. I do expect this week to be slightly bullish overall. But that is going to conclude this video. If you guys found value out of it or simply entertainment, hit that like button for me, subscribe to the channel, and comment down below. What do you guys think about that $1 million sweep order? Let me know what you guys think about that. What is your price prediction? What is your price target? How many shares do you own? All of that. Hit the like button. Make sure to hit the like button if you guys are an ape and you own AMC stock. So love and appreciate you guys. Thank you for watching. I will see you in the next one.